Hi, welcome to the channel Trading Game. So finally, after some straight number of days losses or some missing trades, on October 30th I've got a profit. So I've actually able to gain 100 points. So since I do not have a capital, I just traded with one lot in BankNifty. That worked very well. So tragedy, like when I have some amount to trade, all the capital gone. Now I don't have the capital. I just traded with it with one quantity, one lot, that is 15 quantity, but I'm able to manage extracting, like getting 100 points profit. So if you see the chart, not the chart, but if you see, say I've taken this Bank Nifty 51,900 PE call at 10.6, and then the target was hit by 10.24. So around in 20 minutes we have got the profits booked. Wherein so since it is actually expiry day, you should not trade after 11. So before 11 we should only follow the 3 minutes candlesticks pattern, and the strategy that worked is basically the strategy, highest volume candle strategy that I follow. So let's jump into the screen. So if you see, I've set the GTT to loss 109, like is the stop loss, and then target is set to 225, wherein it is actually executed at the market order. At 233. So, and then we have got a profit of 1590 rupees. So the amount that was used for this is very low. I just have 2800 in the account, wherein to take this trade it was around 1800 or 1900 we have got it. So the profit was around 1500. So it's almost double. So almost same, 75% of my total portfolio amount that I have capital. Okay, let's jump into the chart now and see how it actually worked. So here is a chart. The one I've taken trade is basically this one. So the strategy worked is basically, so I was waiting for 927 to be completed, and then it is actually there was a good rally of the price here. So if you see, but it actually managed to come till this point and then retraced back, but there was no high red volume candle form. So around at 9:45 there is a high red volume candle, and again later 9:51 and then 9:54 that is the last high red volume candle form. So we have to take the trade below this entry. So we have taken the entry here. So while taking the trade at 131, so due to the market order it was executed at 127. So if you just compare this like this, so it was around 30 points. We can put the stop loss. I have managed to set the 30 points profit loss. So now the target reached to, I've set the target to here, but so 225, but it managed to come around 233, so till here. But anyhow, like this is actually my stop loss, this is entry, and this is the target, and it actually worked very well. So that's the only trade I've taken, and it worked good. Now let's look into the charts, PE, put and call of Bank Nifty and Nifty together, see and how the strategy works. So this is the first strategy that worked well, and later if you see, after, like, since it is actually a post, basically this is a expiry day, I will not prefer to trade post 11 AM, but still if there is some opportunity, if you look for like around it, like at least not till 1 PM. So you may see some momentum at 1 PM, after 1 PM to 2, between 2, like if there is any opportunity you see, you can trade, but mostly avoid it. It won't generally work on the expiry day. Like today we may see some price moved in good swing, wherein it will not always happen. So around at this point, so this again highest volume strategy I followed. So after this, so here if you see, there is a high volume, the green high volume, and then there is a red volume, that which actually mitigated the highest green volume candle. So we can enter the trade here, but so it's not immediately that. So once you wait for it, if you see the swing pattern here, like a spinning top that happened, so you can enter it here. Okay, so if the target should be this one, so FEG, so since it mitigated the fair value gap, it will travel towards the unmitigated fair value gap, which is this point. So it is around 65 points. So for the stop loss of like around 20 points for the risk you made. So these are the only two places. Again, this is where at 1 p.m. I generally do not want to take trade here. So it is completely, you should completely avoid that too on the expiry day. So for PE, it is only one opportunity we have got here. Now let's jump back to the Bank Nifty call option. So if you see, they started in the negative, like the price is going down and down and down, and there is this one after 927. This is the highest red volume candle that mitigated, but you should not trade this one because it actually mitigated the highest green volume candle. So if you say, and also it is very near to the FEG, 15 minutes FEG that is created. Even if it actually mitigated, it will just reach out to 15 minutes fair value gap, which gives you very less risk to reward ratio. The risk is more and the reward is very less compared to the risk. So you should avoid this one. You should not trade this one and wait for the next opportunity. So here is again the highest red volume candle, but it is not like it didn't reach to that, like limit order will not be executed, and then you wait for the other. So here is what we have got, the another one. So again this one. So this is the second, like this highest volume candle that we have got after this one. So here is what we got. So we can enter it here, enter the trade here. So after you enter it, the trade here, you can see it is also mitigated the fair value gap. So it will reach to the next fair value gap, but the next fair value gap is basically this one. 15 minutes fair value gap will be the first target. So I generally target it to here. So that is around the 1:3 risk reward ratio, which gives us around 100 points for the risk of 30 points. So that is one good strategy that we can follow. It actually went till so far, so almost this FEG. So it actually the target we can set it to next fair value gap or the order block. So if you see, this order block has been successfully taken out. So again, since this is an expiry day, we prefer not to trade after 11 p.m. At least till after 11:30. So but still, if you are like keen to committed to take the trade, so you can see the next opportunity we have got. So this is based on again the highest red volume candle, that is after the highest green volume candle. So here is what we have got, the first opportunity to trade, enter at the limit order. It does not like it didn't hit, and then again next year it is, we will shift the limit order to this level. So once it is at, actually it has given us a profit of around 1:2 ratio. So it was around 70 points. We can actually get it by for 36 points. So it's not exactly 36 points, so we can just reduce the stop loss to some specific point to this level. But yeah, this is what actually the profit. So again, after this also, like if you see, once it is mitigated, you can actually target, like this fair value gap is mitigated, so it will retrace back and then it will again come back to the next fair value gap. So till here. So it's all happened after long time, after like 11:30 around to 1 p.m. So we should not all consider this into the picture while taking trade on the expiry day. So don't be so over greedy or thing. Just avoid trading after 11 a.m. or 11:30 p.m. on the trading day. Just grab some points here. Now let's quickly see how it works in the Nifty. Nifty, if you come here, it is actually put options 24,400. As per our strategy, the highest red volume candle after the 9:30 p.m. is actually didn't work here, so it failed. So if you have tempted to take this trade under this one, it actually hit the entry but not the target, and it hit again stop loss. But you should avoid this one because it is highest red volume candle that actually mitigated the highest green volume candle. So this highest green volume candle is basically mitigated by the previous candle only. This is after that candle, but still you should be very cautious because it has formed this Kondi pattern. The Kondi patterns are also powerful patterns. It is in the opposite side, seller's side have a Kondi pattern formed. So better wait for the result, and again just see if there is another high red candle that is also mitigated, but again that didn't reach to the target. It is hit the stop loss. It didn't work well. So looking at the Fibonacci series levels, I think it is not at the sufficient level, right? So after I came to here, it is 618. It reached to some point, but it is also again retraced very little here. Before that, what we can see, so till this point you may just take the trade and hit the stop loss, but when you see here, actually it has formed the volume gap, and it is actually mitigated back, like it formed the volume gap and mitigated by the red candle. So it gives the confirmation, like one price action pattern it is formed. And again, if you see the next two candles, there are two BM candles formed for the seller side. So that again gives us the confirmation. This is a strong confirmation that price will definitely reach to the higher high, like this it will definitely reach to above this point. As I expected, it actually reached to this above point here at 1 p.m. So after that, again, since it is not expiry day, you can treat that as you can consider it to take the trade. See if that is has mitigated the highest red volume candle. So this one, so green candle, and then low volume and the highest red volume candle. So this is basically, what is this? This is again a tongue pattern for the seller side. So tongue pattern is more powerful from the seller's point of view. So here the expectation is that price will still move lower and lower, but we can just take the entry of the limit order below this point, or like after the confirmation only if you want to take. So if you see again back, here is a red volume, highest red volume, and then again highest green volume candle. So this is again seller side, buyer side tongue pattern form. So seller side tongue pattern has been dominated by the buyer side tongue pattern. So that is a very good pattern. And when the tongue pattern happens, you should not look for the retracement, enter immediately, because it will retrace later after some point of time, after it has gone at least 1:2 or 1:3 ratio movement. So you can enter it here, and then at least if you target to 1:2 also, it is something. Yeah, at least we have got 1:2 profit to reach here. So this is good. So if you see after the 1:2, it has actually retraced back to some level, and then it actually moved further. So after 1:11 a.m. you should not be so greedy, like just lock the profits for 1:2 ratio for now, and then during the retracement and reversal you just take the opportunity and see if there is any price action pattern clearly giving us the opportunity to enter. You enter it, otherwise like don't take any risk. So with this, actually the target, as per my target that I will fix, it is only the fair value gap till here, but that was only 1:5 ratio. So it luckily gave us 1:2 ratio profit also. So this is how it worked. So all our strategies, the morning 9:30, after 9:30 a.m. highest volume mitigation didn't work on this put side, but it actually worked for the moving average high volume mitigation strategy. So again, quickly look at the Nifty call as well. Okay, so here if you see after 9:30, this is the highest red. No, it is not the highest red volume candle. Again, this is the highest red volume candle formed, but if you look it carefully, so it actually mitigated the highest green volume candle. So you should not take the entry. So wait for the next highest red volume. So there is this one. So if you see, this is the highest red volume candle happened. Sorry, this is the highest red volume candle, and also this actually formed after the highest green candle that is above moving average. And also this highest red volume candle is below moving average. So this is one of the strategy. So this now at this point of time we have got after 9:30 a.m. strategy, as well as it also includes the volume based strategy as well. But if you look carefully, so this red candle, whatever it is, the target, the entry point will be here, the open of the red candle, and then stop loss we can set it to here. But that is very huge, right? In general, in Nifty, the 20 points stop loss is not recommended. Definitely it will retrace back. So if you see, so here is what our stop loss, that is around 20 points. Though we entered and it didn't actually touch the stop loss. If you now target for 1:2, yeah, so it worked very well. So you lock your target by this pattern, but you wait for the retracement, because if you see, there was like till while you take the trade at While you take the trade at 10 right after 10, it is around at 10:09 p.m. 10:09 a.m. you hit the entry, but you were in losses, like the portfolio is in loss till 10:45. So you should hold your horses because you strictly had the stop loss. You should wait for it to hit, otherwise take the profit. You should not change in between. But it is very difficult to be like that, because after the prices keep moving in the negative side for a very long time, you will not be confident to take that trade. You will not be able to, you will not be confident that it will hit the target, so you'll quit it. So that's why, to avoid such cases, like when it is a long candle, that to more than 10 points of candlestick pattern, like candles, red candle formed, you should not trade immediately. You wait for the right opportunity. You can you can enter at the 0786 of the that swing, but again that is not confirmation. It will, most of the times it will retrace from that level, but we are not sure, like anything could happen. So you wait for the price action confirmation. So with this pattern has given us the price action confirmation, but it is not that. Again, the stop loss is high for this. If you keep waiting for that, it is actually here that we have got a proper price action pattern. So this is BM and BM, two BMs consecutively formed. That is actually gives us a confirmation, proper confirmation. You can enter here around at 167. So whatever the target you have set as per the previous thing, so that still hit, or at least it is actually hit. It actually hit the fair value gap. So that's how it actually worked. So it is also like good move. It has given us around 40 points profit for the 20 points risk, 1:2 reward ratio. And it is not actually the 20 points we can target, like we can set the stop loss. It is actually, we can minimize it to 10 points. So it was around like 10 is to like 50 points. So it was around 1:4. You will get it. You will get some profits, but you can ignore that one. So again, later on move with the same other strategy, the moving average highest volume mitigation candle, as discussed in the previous video, that strategy. So that would work well. So after 9:30, like after 1:30, if you see on the PE side, we have got a good move. So as we seen on the previous screen again, so it actually given us the proper profits here. So that's it for this video. Overall, actually, if any of the trade you take on the PE side, you are very good. Like on the call side, you are very good for the first trade. On the PE side, you should have been careful. So don't blindly follow their strategy. Look at the other opposite side as well. So it actually moved very lesser and lesser, like price dropped very dropped down to lower high. So while you manage to enter at 1 p.m, if you are still active at that moment, so you will be able to get a good trade. But I don't think I will not be able to take this one. I would have skipped this one to take. So in the morning session, on the call side, I have got this profit from here, and on the put side, I have actually got the profit from this one. The actual trade I have taken is this one. I've got the profit of 100 points, but if I wait for some time and take the opposite side entry in the call, 51,800 call, I would have got around at least 100 more points. But I didn't take a look into that. I was not active. I've just taken the trade and closed the laptop. So that's it for this video again. So it actually worked very well. After a long time, I've seen the profits, that to 100 points of profits. Think this is a game. So our strategy worked very well with some conditions to be applied. But again, keep in mind that no strategy works very like 100% true every time. So the higher the success rate, it would give you the profits eventually. All the best. Adios.